is I, Mike Martins, bringing you another very important update on what's going on with payday loans. I've already done a few payday loan videos. It's kind of important because we need to crack down on what's happening where people are getting kind of shafted, if you want to put it that way. I think shafted is a nice way of putting it, of how bad some of these loans are and some of the fine print, and then some of the renegotiation of the loan as you go along. Have you guys ever heard of renegotiating the rules as you go along? Yeah, it's renegotiating the rules in the favor. Yeah, okay, it's renegotiating the rules in favor of them, and it's really sad. It's broken, and it's only one-sided, and when it's always one-sided, you're always standing to lose. You know what I'm saying? I don't know how you guys like losing. Do you like to lose? Yeah, no one likes to lose out there. Okay, guys, British Columbia cracks down on predatory practices by payday loan companies. So British Columbia is bringing this to light because it's become a really big problem, okay, guys? The BC government is cracking down on predatory practices by payday loan operation in the province. Solicitor General Mike Fortworth introduced a legislation on Tuesday that strengthens the consumer protections and introduces tougher rules on payday loans and check cashing fees. There will be a better understanding of the terms and conditions that you are going to be going into, Fortworth says. Right now, payday loans are regulated, and what we are finding is that the companies are very good at evolving to products that fall outside the existing legislation. Right? It is unclear how many British Columbians rely on payday loans. I don't even want to know because it's scary. By the government is concerned, it's a large and growing issue. Often borrowers will take out loans that they struggle to pay back and leave them in financially vulnerable positions. So, last year the province introduced rules that extended the payday loan agreement cancellation period, so borrower now has full 2 days to cancel. The government also lowered the maximum fee from $17 to $15 on every $100 borrowed. Concerns that have been raised that payday loan companies are predatory and do not properly explain the fees to borrowers will pay. That's the problem. They're not transparent, and they know you're desperate, so you'll sign on any line to get whatever money you need. And that's really bad, and that's how you start screwing people's lives over, you know what I'm saying? And I hate screwing I hate people getting their, yeah. It sucks the big pickle. Predatory and do not properly explain the fees borrowers will pay. A new consumer financial education fund will be established to improve consumer financial education throughout the province. Why don't people learn this in high school? Why are people learning financial importance and how to buy your home, how to start a business? Why don't they learn that in high school? What are they learning in high school? When I went to high school, everything I learned has nothing to do with what we're doing today. Reading. Okay, yeah, they teach you how to read, but you need to learn how to read so you can learn all the other garbage they want to shove down your throat. And French. What are you teaching us French for? No one speaks it. Regrettably, many people in our province do not understand the true implications of taking high-cost loan, only to find out later how hard and how long it takes to repay. CEO of Credit Counselling Society of BC, Scott Hannan, said, Consumer Protection BC regulates the existing payday loan industry. According to the organization, British Columbians borrow more than $400 million a year from the service. Year over year, borrowing is up in the province, but the government is cautious about having too many restrictions because it could open a black market driven by loan sharks. I don't think so. I don't think the government wants to spend time on this. That's the thing. They want to spend time on bigger plans they got going on for Canada. We support efforts of the province that are designed to protect violate customers who use these services at high cost to them. Yeah, so let's get into some real articles here. This is from, what is this, Global? What is this thing? Yeah, brought to you by Global News. So let's move on. Payday loans. How payday loans work, biggest dangers, and 14 better alternatives. You like when I do that? Yeah, you know. Yeah. tongue twisted a bit sometimes, you know what I'm saying? How payday loans work, biggest dangers, and 14 better alternatives, payday loans. According to the survey by blah, blah, I don't know who that is, roughly 25% of Americans live paycheck to paycheck. That's scary. That's scary. The money they make just barely covers the day-to-day expenses, with little or nothing left over for emergencies. If you're in this situation, any unplanned expenses such as a $300 car repair can cause a financial crisis. Payday loans, also called cash advance loans, appear to offer you a way out. You could walk out into one of thousands of payday lending offices across the country and walk out half an hour later with $300 in hand to pay your repair bill. Then your next payday, you can come back and repay the $300 plus $45 interest. Whoa, that's a lot of vig. Wow, that's a lot of vig. Holy smokes. The problem is, if you had a hard time raising the $300 in the first place, losing $345 out of the one paycheck leaves a big hole in the budget. And so before this month is out, you could find yourself coming back for another loan to cover the bill you can no longer afford. Before long, you end up entrapping in an ongoing cycle of debt going from loan to loan, while the interest payments pile up higher and higher. A 2012 report from Pew Charitable Trust found that a typical payday loan borrower takes out 375 loans per year, paying a total interest of $520. Wow. Many borrowers can't break free of this cycle without taking extreme measures. They slash their budgets, borrow from friends and family, pawn their belongings, or take out a different type of loan. These are all steps they could have taken, avoided getting the payday loan in the first place, saving themselves all that interest. So if you want to avoid payday loan trap, you should make sure you've looked at all their other options first, even when you absolutely need some extra cash to make it through the month. There's almost always a better way of getting it than turning to Payday Loan Shark. So, wow. How a payday loan works. Smaller amounts, shorter terms, no installments, okay? And basically, you have to pay 5% back each month. Oh! That's like 5% each month. That's 5, 10, 50, 20, 25, 50. That's 60% a year. That's horrible. That's worse than those, like, you know, those don't pay a cent cards and, yeah, high interest. Yeah, you'll be paying 75% interest yearly. Yeah, look at that. APR of 300 yearly basis. It works out to 391%. Wow. A decent credit card is about 1% on average. You're paying, like, annually, like, let's say 12, 14% annually. Then you have a blended rate and a revolving rate. That's how they get you in those credit cards, too, eh? Automatic repayments. When you take out a payday loan, you hand over a signed check, the document that gives you a lender permission to take out money out of your bank account. If you don't show up to repay your loan schedule, the lender either cashes the check or withdraws the money from your account. Easing renewals. Yeah. Who uses payday loans and why? Let's find out. Young. More than half the payday loan users are between 25 and 44 years old. Oh, I'm 40, so I'm still young. Okay. African American. Most payday borrowers are white, but that's because white people are such a large group. African Americans make up only 12% of the population, take out a quarter of all payday loans. Roughly 1 in 8 African American adults use payday loans. Low income. The median household income in the country is $53,657 in 2014. So, low income. Renters. People who rent are much more likely to use payday. Why? You should be saving money for renting. You shouldn't be going crazy. I mean, then downgrade your rent. If you have a 2-bedroom and you're only using one, and you only sleep in one, and there's no one else with you, if you live alone and you're a bachelor, go get a bachelor pad or go rent a room. Put a lock on your door and a fridge in your room. That's done. Relatively uneducated. That's me. More than half the payday loan users have no education beyond high school. Me too. I got no education beyond high school. I barely finished high school. Woo! Unemployed or disabled, payday lenders are perfectly happy to borrow against your unemployment or disability benefits. Of course they are. Separated or divorced, about 13% of American adults separated or divorced. However, this group makes up 25% of all payday loan users. About 13% of separated divorce adults have taken out payday loans in the last 5 years. Yeah. Oh. Yeah, that's big time. So, dangers of payday loans. Here we go. This is what I want to get to. Okay. Renewal fees. When borrowers can't pay back a payday loan on time, they either renew the loan and take out a new one. So even though they keep making payments on their loans, the amounts they owe doesn't get any smaller because the principal keeps growing and the interest rate grows because you're paying more on the principal, right? Collections. In theory, payday lenders should never have a problem collecting a debt because it can take the money right out of your checking account. The problem is if that account is empty, the lender gets nothing, and you get shocked with a hefty bank fee. There you go. Credit impacts. Payday lenders generally don't check your credit before using you for a loan for such small amounts. At short terms, it's just too expensive to run a credit check on each one. It's only $17 to run a credit check. What are they talking about? However, if you fail to pay back your loan, the credit bureaus can still find out about it, even if the payday doesn't report it. The collection agency that buys it often will. Yeah, because it's only the collection agency pulls credit scores like in bulk, so they're probably with First Canadian or Equifax, so they'll just be pulling it at $7 a pull, right? So the cycle of debt. The biggest problem with payday loans is that you can't pay them off gradually like mortgages or car loans. You have to come up with the whole sum. Interest and principal in just 2 weeks. For most borrowers, a lump sum this size is more than their budget could possibly handle. So they just renew their loans or take out new ones according to the Consumer Finance Protection Bureau. Roughly 4 out of 5 payday loans end up being renewed or rolled over into a new loan. Laws about payday lending. So permissive states, in 28 states, there are very few restrictions on payday lending. Restrictive states, in 15 plus states, Washington, there are no payday loan offices at all. Some of these states have banned payday lending outright. And then 3 hybrid states remaining, 8 states, the medium level regulations, some cap the interest rate payments. They get charged lower rate, around $10 for each $100 borrowed. So you got to watch out, guys. Yeah, and then there's the auto title loans where they take a lien on your vehicle. Watch out for that because they'll be bringing up, they won't even call you. They'll just bring a tow truck right quick in a heartbeat to pick up your vehicle. Payday loans are debt traps. Millions of Americans have used payday loans. They are small, short-term loans known for charging staggering interest rates, sometimes in the 300-400% rate. Oh, yeah. While the loans can provide quick financial relief to people who need it, the loans can quickly spiral and send borrowers into a cycle of debt. The Consumer Financial Protection Bureau, sorry, I have to hiccup here, but I'm trying to hold it back. Sorry. The Consumer Financial Protection Bureau is responsible for overseeing payday lending. And earlier this month, it announced it would be delaying changes to payday regulations. Today, on The Indicator, we look at the business of payday loans and what it's like to get the debt cycle of payday lenders. Watch out, guys. Protect Alaskans from predatory lenders. Okay, there you go. Alaskans are getting protection. 37% of Ontarians insolvencies involve payday loans, survey finds. So more and more people are basically going bust because payday loans are a hindrance. Remember, guys, when you have, oh, that's only $500 I own. Oh, and then I got a credit card for $700. Then I got a credit card for $3,000. Then one for $26,000. Then I have one for $10,000. A line of credit and an auto loan. This is it's a revolving debt. You get it? It's revolving. It's going in a circle. Wax on, wax off. You know, it's going in a circle. Yes. So it's going in a circle. So watch out for that, guys, because you have a blended rate, and look at what your blended rate is. It's phenomenal because you will be in a heap of pain when you see how much you're actually paying in debt, in interest rates and in blended rates, and what you're actually paying out to finance this leverage you're taking out, or what you're leveraging out to borrow, or what you're borrowing, basically. What it's cost to borrow that money. Ontario Insolvency seeing a greater share of this loan type against payday loans are making a huge comeback when it comes to making people and helping people make ends meet. Sorry. Just trying to get things together here. And then how what is this? What was this? They're trashing Trump here again. High interest rate loans to desperate people built a $90 billion industry. Billion. During the recent government shutdown, U.S. Secretary, so they're going to go over, oh, Donald Trump closed the government and people need to borrow money and blah, blah, blah. And last but not least, I want to save this one for last. Though recipient paid 884% interest, inquiry demands on payday lending shakeup. Senate committee says products appear to be designed to take advantage of those financial hardship. Yeah, they're there to make money off your back, to basically make you more impoverished. And that's what's that. Payday lenders and rental companies should face tougher regulations and need to improve the way they consider the needs of struggling families, an inquiry has found. A Senate Economics Committee inquiry, which reported on Friday, was told that in one case, a person on the dole paid the equivalent of 884% interest rate on a rented clothes dryer. The inquiry found that payday loans were being offered of rates between 112 and 407%. Often these products appear not to only have been targeted at Australians in financial hardship, they seem to have been designed to take advantage of them, the report found. What's going on in Australia? I mean, don't people read the fine print of what they're doing? Like a clothes dryer? I mean, the weather's there good most of the year. I'm pretty sure you can hang your clothes to dry outside. It recommended new laws to protect consumers, extra funding for regulators to police the small and medium credit contract sector, and a mandatory obligation to act in the best interests of the clients, of course. The bill included imposing a cap on total number of payments that can be made on rent-to-buy schemes and requiring payday loans to have equal repayments and payment intervals. See, if they did that, required payments, they could do a 12-month amortization. You could pay the $300. You end up paying back $350 or $360, but you end up paying it off in small increments monthly, and it doesn't put a hole into your thing. That's my advice for payday loan companies. They don't want to do that because they're going to lose money. They want you to borrow the $300 and end up having to pay $1,700 back. That's what they want, and that's how they take advantage of people. Watch out for this crap, people. So how do you do, guys? Like they said, what do we do to fix this? If you have to pawn something, pawn it, guys. I know it hurts. I know it could be a family heirloom. But you know what? Sometimes you need to do what you got to do, right? Maybe downsizing. Maybe trading it or bringing in your car. Maybe cutting down to one car. If you have two cars in the house, you start using one car, pay one car insurance, one gas bill, one everything. You'll start seeing more money in your pockets. There's a lot of ways of fixing this, you know what I'm saying? So, buying clothing at thrift stores. There's tons of good clothing at thrift stores. I'm just trying to throw up ideas there, you know. Cutting back, maybe trading in your brand new car you bought on payment plan, maybe getting a car for $3,000. This way, you know, you have a car that's worth $3,000, and in 2-3 years down the road, if you keep it in good condition, you could sell it back for $3,000. You buy a car for $38,000, you drive off the lot, it's worth $26,000 or $20,000, if that, and you're lucky to sell it for $15,000 3 years down the road. So keep that in mind too. You know what I'm saying? Anyways, okay. That's it, guys. I just wanted to make sure people got the update on these predatory loans. Be very, very careful what you do, because no one has to pay these stuff. No one has to pay this stuff back but yourself, or family that has to come in later, or, you know, employers and stuff that have to stepping in to save your hide. Let me know what you guys think in the comments below. Thanks for watching. Don't forget to hit the subscribe button, and don't forget to watch me stream on my backup channel, because I cannot stream for talking about Australian housing. Anyways, guys, Mike Martin's here. Thank you. good night. Thanks for watching, guys.